And then good afternoon. Thanks so much for joining in. Neeraj here. Good having you. And from whatever little I hear, it's been a well-attended conference, some very interesting discussions. Ajay called me and told me that he was very happy he was there too. What stood out for you, Nandan, during the day? I mean, I'm sure there are a bunch of conversations that happened, a bunch of companies that you met or you made your clients meet as well. What stood out for you?
What's coming out strongly is that, globally as well as in India, incrementalism is not working. What's working is transformational changes. For example, one of our most powerful speakers was Anil Swarup, and he talked about the way things need to be transformed at the implementational, that is the execution level, is extremely important, and that can make things, happen. So he talked about how, coal production can double, how Uday can succeed because the states, all their concerns have been addressed, and how, in Science Seal delivered, you have to do signing last instead of first. So first you have to deliver, seal it, and then sign it. So I think what stood out is this government's attempt to do, sort of baseline reforms, which were very necessary in the country for a long time. When you talk, whether you talk about land, whether you talk about SEB reforms, whether you talk about the bankruptcy code in banking, whether you talk about, today's newspapers had that about universal crop insurance. These are fundamental things that are required. So I think what stood out is a few things. One is that transformational changes are required and they take time, which is why there is short-term pain. Number two is when you go to, across sectors, we saw that in IT that the deal wins have been increasing. In banking, what we saw is, yes, over a period of time, your margins will somewhat decrease, but you're going to have a massive explosion of accounts and new things. As they say, and that in good times and in slightly, if you take a slightly longer time frame, the part of the economy which gives maximum wealth is always the finance related sectors. Durables and everything else comes in a slightly lower order than that. The biggest multiplier to growth, income growth, is always financing. So I think the New Gen Banks panel was fantastic because they actually talked about what do you think, what they think will drive growth going forward in various pockets. Then we had consumption. We had a consumption panel and they talked about how premiumization is increasing. Even though times are bad, still there's not been too much of down trading like in the West. Of course, we still have what's going on as the roads panel right now. NHAI and the others are there, and finally we will have the personal interview of Mr. Bhargav with Madam Shikha Sharma. And that's a tradition that we've had, which is a personal interview, and that probably will also bring about how, being from the IAS, how you marry systems between the private and the public sector. So these are some of the highlights of the conference.
Nandan, which is what I wanted to come to you about. You've spoken of a number of sectors. We in fact interacted with Tom Albanese of Vedanta. He's speaking about increasing the cash flow levels, repositioning the business to adjust to market conditions. What interests you within this sector?
Let me tell you a little secret. It's always nice talking about secrets in public media. Secrets because, it's taken me so many years to learn them, some of them. So you see, what happens is you have this animal called valuation and you have this animal called outlook. In your mind, you have these two animals which sort of frighten you when you're taking either a buy decision or a sell decision. So when you're buying, if the valuation is low, it feels good, but then the outlook is also very bad. And exactly the opposite happens in a sell situation. So what do you get influenced by between valuation and outlook unfortunately colors your decision to actually buy or sell a sector or a country or a stock. What I have learned is that at the lows, at the time of buying, valuation is more important than outlook, all other things being equal. So all other things are never equal, of course, but generally what I'm saying is basically as long as the company is going to survive, is going to do reasonably, it's there, the valuation generally will trounce outlook, because the outlook will happen over time. Sell is actually an anti-symmetry. It's not the opposite. What happens in a sell situation is it can remain overvalued for a long time. It is only when you see conditions worsening and it is overvalued that is the time to sell. So, to answer your question, in any of these companies, whether it's, strong buy, strong sell, or a sector which is strong, either way, I think this is something fundamental to remember.
Nandan, you mentioned your most powerful speaker at the conference was Anil Swarup, and of course, he would have spoken about Uday. We heard the coal minister as well, the power minister speaking to media the last couple of days as well. What have you made of the reforms? And based on that, I mean, what is it that you would be advising clients? What is it that came out of the conference? Which are the ones which are the favorites?
So I think what is for certain is the rate sensitives. So, a conference will give you a lot of inputs, which are, many of them are long-term in nature. At the end of the day, a conference is one part of your whole decision mix. So I think the most important thing is rate sensitives, whether it's banking, whether it's automobiles. I think that will remain my biggest call. The second after that will be oil marketing companies. I know because of these Bihar elections and so on, it's possible that oil prices were not really passed on, and it will take time for them to realize their values, the oil marketing companies. But I think the second big call will be oil marketing companies. Then I have infra and EPC. That will be the third big one. Fourth, power, T&D. That is the transmission and distribution sectors. And finally, some parts of IT, pharma, and South Indian cement companies. I see. So that will be roughly by mix. And what I would avoid right now is telecom and FMCG.
And Nandan?
So I think we need to give our picks in an overall perspective and not just coming from the conference. Yeah.
Yeah, of course, I understand that. But what is it then, in light of what you just said, that would stand out within the banking space?
I think public sector banks still have a little bit of a problem. So except probably for the largest bank, which is very well managed, the others will have a little bit of pain still left. A little more time, because the one part is power, then they have the implementation of all those by the states, which will take a little bit of time. I would still prefer the large private banks, and for a bigger beta, I would prefer the NBFCs. So I think NBFCs will have a good run. Remember that this is not a time for short-term investing. So I think whatever I say, one of the other dangers of a market like this is that you will constantly have contra trends. So you will have a main trend running and you will have a very sharp contra trend. To give you an example, there are a lot of medicines being used in the West. So for example, if China suddenly injects a lot of medicine, so metals will start shooting up, as an example. Similarly, in India, if something happens, there'll be a boost, so to a particular sector. So it's one must take things in perspective and not get caught by those medicinal traps, as I call it, which are more contra trend. So from this conference, I think the areas that I would really, which really come out are both in the long term and short term is financials, especially the non-bank financial services and the large private banks.
Nandan, as I see from the data that I have, there was a fair bit of representation of commodity companies at the conference as well. And off late, we've seen a bit of maybe it's a trading bounce, I do not know, but a lot of people believe that there could be a substantial bounce back due to fundamental factors in key commodities, soft commodities, agri commodities. Sugar has been a prime example. It's a small pocket. Suddenly we see steel moving up. I've talked to a couple of fund managers who say that over a 3-year period, they really like the base metal commodities as well, because a lot of pain is in the price. What has been featured at the conference, and what is the house view on some of these commodity names?
So these are actually different questions, so let me answer them one by one. One is the proportion of commodity companies seems high because they are mostly solo speakers, whereas most of the new tech or transformational ones are in panels. So the new gen was a panel, the consumption was a panel. So there are 4 or 5 people in one panel, whereas each of the speakers are like, there's cement, there's one person, there's metal, there's one person, and so on. So strictly speaking, actually the transformation ones far outweigh commodities, because there are only actually 2 people from commodities among the speakers. Having said that, commodities, as I mentioned, is a contra trend. When you talked about sugar, there There are two, three things. One is globally, people are expecting soft commodities globally to rise because of climatic issues. There are rice problems in rice growth in Thailand, and all over the place there are all sorts of other problems. So I think the problem is that in India, you can't take a direct exposure to even the sugar thing. It's nothing really to do with sugar prices. It's to do with the fact that for sugar exports, you have cane price which has been increased. So it's not really directly related. So I think in commodities one has to be careful. Yes, there could be a bounce back like I mentioned, but I think that's a time to sell commodities if it makes a major profit by then. I think there will be a lot of pain in commodities. There will be a sharp bounce back within the next 12 months in commodities, because there will be some mine closures and they will be pulling back from China in terms of inventories and so on. So yes, I think it will be a fantastic opportunity, but I don't think that in the long term, as in the next 5 years, commodities are a great run like they had earlier. Even though I think India will be a larger driver of commodities than China is. But for that, this Make in India program has to start off, because if you think of what drives commodities in China, it is what they manufacture which is sold outside. So the world has to recover, not just China. China only manufactures. So if the world demand does not really pick up, commodities won't really pick up. So some of the substitution from China to India has to happen.
Great having you with us and sharing all of your views as well as secrets, Nandan. Thank you so much for joining in on the show.
Find us on Facebook at facebook.com/etnow and don't forget to click the like button. You can also follow us on Twitter at etnowlive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/etnow.